and not how much fun they had or the hundreds of dollars they spent. But it is what it is. You know how it works. All right. So we got to trade today and make some money to pay for the Disney experience for the 7-year-old. And today, again, we go back to what we're always trying to do. This is still yesterday's notes, but it is what it is. I just want to remind you, if you're not planning, before the bell at 9:30, you're screwed. It's too late. You got to know what you got to be engaging in. You have to know exactly what to trade today. You want to know whether or not this market is safe to trade or if it's trap day and where money's positioning. And that's why we do this show, and that's why we're here every single morning. And I'm going to be going out west in July for a week. I'm going to be doing this show at 5:45 in the morning from the Tahoe Mountains for a solid week. So that's the type of dedication that we have to have when it comes to the markets, because my daughter's probably going to want to go somewhere there that I can't afford. So we'll figure it out. All right. So is that alkaline on the shelf? No. What do we got here? We've got the 83 Mantle reprint of the 52, which Eric and Northport's father painted. Otani rookie. We got a signed Pudge. We got Barry Bonds rookie, Banks rookie, Jackie Robinson, Holiday, Soto rookie, and that's my second favorite card, the Bowman color, 53. Sorry, I'm talking. I'm not even showing it to you. There you go. That's the Pee Wee Reese right there. That's a fun card. So, yeah, we got a lot of Jackie Robinson. This just came back graded at a 2. A little upset about that, but it is what it is. And as I was showing you, one of the cards, my father's birthday, he had one of these exhibit cards from the late 40s, early 50s. And on the back of it had his Christmas list. I have a Clemente. Rookie. It's upstairs in a safe. I'm not going to tell you the code, and I'm not going to tell you where the safe is. We'll go from there. Pulled and slabbed the 86 tops traded bonds yesterday. Oof. Wow, that is awesome. All right. So the key thing here today is, I'm going to walk you through momentum, and I'll talk about these stocks momentarily. But really, what I want you to get out of this conversation today is digging deeper in the front of the book. Oh, in front of the book to the left. That's a Ted Williams. That's the Ted Williams 55, and then something my daughter gave me. I don't, yeah. So she made a slab for me, a card of me and her. Mint 9, not good. All right. The Stedman and the Thompsons just sitting off to the left side. Yeah, I changed this stuff out. I gotta get the Tombstone poster out of here. I gotta find a better poster. Let's see, what do we got? Got Vertigo. We can go with Vertigo. We'll go with Vertigo tomorrow. How's that? All right. Let's dig into this, because the point of this conversation this morning is, how do you prepare? How do you prepare 30 minutes, 40 minutes before the market opens? And I think everybody has different levels of preparation, and I think it's important to talk about, to have Tony and to have Don and to have Gianni and Blake and Brandon come on, from time to time to talk about their thought process and the way that they set up. Gianni a couple of weeks ago was telling us, look, guys, this market's going to melt up. What's going to happen on June 4th, and where are we now, right? We're back near all-time highs. And it takes preparation, and it takes knowledge and understanding patterns and understanding momentum to prepare and be able to go out 2, 3, 4 weeks and have the conviction to make one-directional trades accordingly. Now, the way that I focus is a little bit different, right? And everybody's got a process. And I'm not telling you that my process is the absolute right way, but it's the one that works optimal for me because of what my interests are and where my academic and trading world has taken me over the last 15 years. So the very first thing that I look at, Garrett, you asked a question yesterday, you didn't get it. Did VWAP trigger a short in the third deviations on an up move? We're going to talk about that momentarily. We'll talk about all that momentarily. Key thing, how do I start, right? And I'm going to walk you through these 5 things that are very important to my preparation and insight every single day. The very first thing that I look at every single day is insider buying. And that usually is pretty boring for a lot of people. But once again, as I've noted, if a CEO or CFO is buying their stock, that right away has piqued my has piqued my interest, and there's a reason for that. It's not necessarily just the idea that this company is going to go much higher, right? So this is the Peter Lynch quote up here. Insiders might sell their shares for any number of reasons, but they buy them for only one. They think the price will rise. And right now, what you're going to see, and I've seen this in the chat room, and I've seen people talk about this, they'll say, well, look, Oracle, $760 million in stock has been sold, including the CEO of the company, Safra Catz, taking $750 million off the table. Isn't that bearish for the stock? No, it's not, because remember, the entire purpose of the market is to sell. And that's a hell of a move for Oracle. And it's not like this guy doesn't have more stock sitting around. He didn't sell everything. He just took, gains off the table at these all-time highs, which is his right to do. But with that said, does it mean that he thinks the stock's not going to go higher? No, he just kind of looks at the current situation and says, yeah, the stock is really, really good, right? 215. I'm going to take my gains. It doesn't really mean anything, because at the end of the day, so many of these executives are compensated in stock. And this is very important. If you are a person who works at a company and you are compensated in stock in any way, and you receive vesting of shares, you get 10,000 shares and your stock is at $20 a share. Well, here's the thing. If you think the stock is going to go down in any way, let's just say it goes down to 18, you're on the hook for $20 a share, because that is your income. When you sell that, if you sold those stock right away, that is going to be ordinary gains. If you sell the stock and it goes down, or if the stock goes down and then you sell it, you're still going to be taxed at the $20 level. So a lot of people are selling on a regular basis because they are compensated in that stock. That's very important to understand. So what are they buying? What's actually being purchased? Well, not a lot, right? Not a lot is actually being pumped at the moment. And there are some biotech stocks in here. You have Moculent Biotech. You have Hudson Pacific Properties. I would say that of anything in this environment, the things that do kind of catch my attention are the fact that things like Hudson Pacific Properties or BRT Properties, apartments, are getting bids. In this situation, senior vice president buying $29,000 in shares. You have a couple of purchases by the Goulds. This is relevant because to put in, $100,000 signals confidence that maybe there's going to be some stability in interest rates. We're seeing full house resorts. But once again, in this environment, is the guy buying more? Well, no, there is no evidence that he's buying more of the stock. There are studies done on insider buying and selling that signal that sometimes just not doing anything is bullish, and you have to view it through the lens that, look, just because they're not buying, that doesn't necessarily mean anything negative that's going on. NUVB, Nuvation Biotech. So Nuvation Biotech, Mark, Chief People Officer. Who has that name? Hey, Don, who's our Chief People Officer? Do we have one of those? Jeffrey Bierman? 171. This is a very small stock, right? I don't know much about this, but as you could see, quite a few purchases. 90,000. Oh, Don is the Chief People Officer. New title. All right. Like that. And then Prospect Capital, PSEC, not something that I'd necessarily want to touch, but that doesn't really give me a whole lot necessarily to work with. Oh, okay. So he's the head of HR and legal. What else you got? What other titles do you have? Well, you're going to win the Nobel Prize, too. We're going to get him nominated for the Nobel Prize. Professor Bierman, as an academic, has the ability to nominate people for the Nobel Prize. And we are going to add Don to that list. Here's the insider buying to selling ratio. Here you go. This is interesting, right? So we're always looking at this chart because in the event that there are sell-offs and if there is pressure in the markets, this insider buying to selling ratio, this blue line, the higher it is, the more buying there is in dollars. And as you could see, these two big downturns that we saw, one happened in late December and then obviously what happened in April, both of them significant spikes in insider buying. That is a contrarian buy signal. And right now, significant selling. So there is far more selling than buying in this environment, which kind of sets the tone of, okay, now I have to assess the next level of things. So we know what's being bought, what's being purchased, and you can drill down a little bit into the 13Ds as well. 13D filings, material purchases. This is what's happened this morning. OTEC, SONM, AutoNation, a sell, 528,000 shares, dropping 20% in that holding for ESL Partners. Nothing really significant except for Pure Cycle popping up on here. That is a name that I always do pay attention to, PCT. It's been a name that I like to trade, particularly around specific moving averages. So right now, PCT, you could see kind of breaking out. But this has been a name that I've returned to time and time again when we get back into these kind of 20-day, 50-day moving average moves. PCT has a lot of momentum. It's an industrial company. And it's interesting to see somebody stepping in and purchasing 619,000 shares at a time that the stock is really rushing toward highs, but that's good. And this kind of becomes more of one of those Gianni momentum stocks. This stock's run from 7 to 15 in about a month and a half. So this is going to hop up on my radar. It's been a name that we've traded a couple of times because of the way that it is the F and G of the F score and Graham score. But right now, that was one of the very few that kind of popped up. In addition to that, looking at Couchbase, whatever you are, just a 9% increase in purchasing. Strong momentum stock, coming off of these 20-day moves. 15 took us up to 20, and we're seeing purchasing right at these highs. So this is kind of breaking down a little bit. Silver Capital, I don't know what you are, but obviously a relatively sizable strong stake in the company and big move, right? 20% move in the stock overnight. So paying very close attention to this and looking at anything else. SONM, this was a name that had popped up a couple of times. Palantir had bought SFRM as well. That had popped up. Surf Auto Air Mobility, big move today, strong move in momentum. This has not been a name that I've necessarily tried to trade around, but I certainly am has my attention today because of the Palantir situation and PLTR. Once again, very strong momentum, just continues to ride higher and higher. I'm not going to step in the way of trying to sell puts or spreads or anything like that on Palantir, but I have been trading it at this level, right? Just kind of constantly buying it around its 20 or 50 day. And if you missed this first wave with Palantir, just know that you're going to get another. It's going to come back at some point. It's going to sell off. It's going to drop down to its 50. It's going to drop down to below its 20, and you just want to stalk it. This is another name like so many others, high momentum, a lot of institutional volume. These stocks, if they ever do get to that 200-day moving average, it just simply becomes a buy, because over and over and over again, going back to 2008, every time the S&P 500 touches its 200-day moving average, the Fed steps in, or there's a policy shift, a major policy shift. So if we look at this, now the next question is, all right, well, what's breaking out and what's breaking down? So we look at TradingView. And as I said, we just had a question about TradingView, right? So how do we focus on this? And I want to thank Mark, who sent me a note on LinkedIn. I haven't got a chance to check it out yet, but he had sent me some coding for volume weighted average price on Thinkorswim in terms of how to set up VWAP for traders who are looking to set the SPX up. But if you just go to SPX here for the S&P 500, again, I don't know how or why it does this, but it does, and that's very nice of TradingView because there's no volume on the SPX on Thinkorswim. But I think that this is likely averaged out by options and futures as well. If we just go to VWAP, right, volume weighted average price on the SPY, I want to know before the market where we kind of sit, right? I want to know, what the reaction is to any news that might come in the morning, obviously inflation, things along those lines. What I'm going to show you right now, and just kind of shake this up a little bit, is we look constantly at all three of these bands, and I leave this chart up the entire day. It is up in the left corner of one of my screens, and what I'm looking for is for volume weighted average price on the XPX to fall into its fourth deviation band. Bottom deviation band, not top, bottom, bottom only. I'm not focusing on overreactions to the upside ever. I'm only focusing on periods of time where volume weighted average price for the SPX on this chart drops down under this line. Now, if you want to simplify this a little bit more, you can just simply add the second, third, and fourth instead. And what this is doing is it's adding the first and second standard deviation of volume weighted average price right here. That's one big chunk. Here's your third deviation. Here is your fourth. If you get down here or even into this fifth, I'm telling you, this is a very high probability short-term trade that you can make. An example of this happened yesterday. And on Monday. I was coming in at 12:30. I had locked myself out of the room. We couldn't figure out how to get me in. And by the time I got in at around 12:37, 12:38, the market had already sold off, and then it started to pop again. This is the Iran, we're going to fire at Qatar reaction, right? The market sells off briefly. But what we go back to Stanley Druckenmiller stating that all the market has become, and he said this in 2018, is a situation where algos step in and buy anytime you get down into the third deviation of price. So what happened? The in-the-money call for the SPY. So this is important. Don't worry. You're not going to be trading the SPX. You're going to be trading the SPY. So this is another very simple thing. Go to TradingView, and you just have the SPY up instead of the SPX. Well, as you could see, a representation of the SPY on Monday, it got down here. The SPY didn't go into its fourth deviation. The SPX did. That's all that matters. And I've gotten questions about this. If the SPY is down in the fourth deviation, the SPX is probably down in the fifth. And I've shown that chart a couple of times. This chart legitimately gets one screen. This chart right here, it just sits right there all day. And every time that something bad happens and it sells off, my instinct is not to go to the chat. It's not to ask everybody in our, it's not for me to say, Don, what happened? My instinct is to run as fast as I possibly can to the S&P 500 short-dated, zero-date options chain on the SPY. And what I'm specifically looking to do is trade the in-the-money call on the SPY wherever we are sitting when the SPX is down at this level. And in this case, it was the 592 on Monday. The 592 at this exact moment was $2. It finished the day at 720. And as I've said, all I'm doing is I'm buying 3 contracts, and I sell at the third deviation. I sell at the second deviation. I sell at the first deviation, and then I let the other one run if it gets above volume weighted average price for the rest of the day, unless it breaks back under volume weighted average price again. Right? Now, you want to buy more contracts? You want to buy 10? You want to buy 300? Fine, but buy them in threes, right? Because you're going to take profits if it moves higher, and if the stock or the S&P 500 does turn back around and starts to sell off, you can exit at the next levels. Very important. So once again, this whole thing, I fire it up every day, and I know you're going to say, well, why don't you just leave it on all the time on that chart on the upper left band? It is a piece of technology, and technology will freeze. I sign into it every day. I make sure that it is actually working, which sounds a little retentive, but the reality is sometimes things freeze, things stop working, and you got to pay attention and make sure that you are set up every single day. It is all muscle memory. So, you have to have a checklist. If you are trading or you are flying a plane, it's all the same thing. This is a good opportunity to reference Gersh on the Chicago floor. He was a pilot. He wanted to be a pilot. He was a pilot. He was like, I have a checklist. I do trade the exact same way. Gersh, right? Loved that line. Loved that preparation. Loved that mindset. Do you do the opposites with the upper bands? That is a phenomenal question. No, I don't. I don't. Because as we know with momentum could just take things higher. I have actually lost more money. The number one mistake I've ever made, and I've lost more money trying to do exactly what you have said. Have you tried to short up here? I have, and it has never worked. I have gotten crushed. And I treat trading in some ways very academically, very high focus on the academic and the financial work. If I were doing a financial study, at a university, and I was talking about reversion trades and S&P 500, and I was building a data set, my success rate down here is going to be probably very strong. But my data set up here, I'm going to lose probably more than I win, and might even get crushed. And I've had days where I tried to short it. I tried to short that reversal, and not just that, a lot of other things were lining up at the same time. In that, on the SPY, the SPY right here, I had gone down to the 3-minute chart because I like to use the 3-minute chart with volume weighted average price. I know one's a 1 minute, but I want to have a little bit more of a deeper understanding of kind of how things are moving. I've seen at the 1 minute and the 3 minute both be overbought, MFI and RSI, and we're up here in the third band. And I try to short and I still get crushed. Market goes against you. The reversals are typically sharp, very sharp from the downside. Can you sell a put credit spread? You could, but I think you're better off focusing on the higher probability conviction with a tight stop, because the last thing you want to do is get assigned, 100 SPY in the event that it is something more significant. I mean, I have to be somewhat logical about the fact that things could have gone pretty bad on Monday. They didn't. We're fortunate that they didn't. But if something significant had happened and we did see this pop, remember, we had sell-offs that happened last week where you would hit this band, we would move up here, we'd get up to around the second deviation, and then we started selling off again. And then we actually came back down and hit the fourth deviation again. So I'm looking very, very short-term upside, one-directional SPY in the money call for the day today, right? 0 date. If I'm selling spreads, and this is a really good question that you brought up, selling a spread is going to take a lot more time. You're not going to have time to react. These things move very quickly. Slick Cobra was in here when we were doing this after the Fed. He made $1,500 trading this, and then never shared any of the wine that he said he was going to buy. But the point is, you got to be very, very quick. Yeah, look, they're definitely tradable. Everything is tradable down here. And you just got to be quick. You got to be focused, and you have to lock in. Like this is the other part of the mindset. You don't just say to yourself, what happened? No. You go right to the trade and you lock yourself in and like, this is what I'm doing the next 5 minutes. And if it happens when I'm on air, I'm not going to talk, guys. I'm just going to be like, look, I'm moving on this right now. I'm going 592 and I'm sticking in this. And then I'm going to sit there and we're going to sit in silence for 40 minutes. And you're going to watch me and you're going to go, wow, this is nuts. But this is exactly what it requires. It requires you to concentrate and lock in on a trade like you're coding or doing anything else. But you have to be prepared to actually take that action. In addition to this, right? So we have volume weighted price set up. The other thing that I have set up on TradingView is my breakout and breakdown stocks. Now, these are stocks that have very distinct technical setups. Right now, I got 57 of this, which is almost overkill, right? And kind of breakout moves. But specifically, what I'm looking for are companies that are hovering or near their 20-day moving average. And I want to tighten this if I can, but their EMA. the strong DMI, strong RSI, strong MFI. And typically when I'm doing this, I think I have a different version of this. Yeah, no, it's the same thing. So if you look at these names, right, for FTNT, PNFP, Caesars, right, all these, a lot of consumer cyclical, what you're going to see in these names is very strong, broader market daily momentum. And what I'm signaling here is I want to point out that once again, this is showing and confirming momentum in the market. And these are not necessarily things that I'm going to trade unless specific conditions align, but I may try to scalp with some of these names. There is an optimal time to buy a stock and to trade it for short duration. And then there is the momentum patterns that come in during the day. Caesars is an interesting name, and as you could see, I have the RSI, the MFI, the MACD, the ADX, and the average true range. I've added a volume down here, but that was just for doing some other academic work. When you get a stock that is moving right above its RSI at 50, over 50 on MFI, your MACD has turned positive, your ADX has switched. Multiple momentum oscillators, all indicating strength at the exact same time. Now, some people have said to me, well, a lot of them, they're all momentum. So, therefore, it's just repeating the same knowledge. No. There is actually an academic study that has been done that showcases out of, I think, 25 different indicators, including fundamentals, technicals, and behavioral things, that there are 4 things that all work in tandem and can provide stronger conviction. It's RSI, MFI, ADX, and average true range. MACD is just a very little pretty short-term momentum thing for people to look at. But again, you cannot just trade RSI. I know people who are like, just trade RSI, and no, it doesn't work because the money flow index might be indicating low volume. That might not be a very strong move at all. The ADX is going to, again, important trend lines. These things matter. And you can read a book. It's called Trading Stocks by the Numbers. It's written by Grant Henning. And then his son, JD, is the one who did the academic study. So once again, a company like Caesars, well, the RSI, the MFI, the MACD, and the ADX all on the same day. What is the date of that? Right there. Well, that's June 18th. Okay, so that was a week ago. But as you can see, we broke that 20 and we broke that 50. Ooh, that's the time to really push across the table. Well, what do I do with a name like Caesars today? Well, there's going to be movements. There's going to be some chop, right? But I can go down to the 3-minute chart, and what I'm specifically just looking for is to trade it, scalp it above these moving averages. And you get that sell-off, and you start to move higher again, and you start to see, again, you go right down to the short-term focus on RSI, MFI, ADX, and you make that trade, and you keep it tight, and you could trade short-dated options doing this. Just keep tight stops. These are all moving in the right direction. Very strong. Now, here's the thing. On the other side of this, you have the stocks that are breaking down, right? You have stocks that are going in the opposite direction, falling under the RSI, falling under the MFI, weakness on the MACD, 16 stocks, including Lockheed Martin for some reason, right? You would think that in this environment, Lockheed Martin would be this really strong stock. Well, no, there you go. What's going on here? Well, that's going to create for me a little bit of an investigation, understanding how and why Lockheed Martin has just traded sideways the way that it has for months. But showing weakness in the RSI, showing weakness in the MFI. You had the switch back over on the ADX back here. It has not been able to break above its 200-day moving average for 8 months. It's just not getting there. In addition to that, if we look at all of these other names, BETL, TLS, typically in a broad, higher, strong momentum environment, I'm not going to try to short. I know that everyone's trying to call the top. I'm just not going to go in that direction. But I do see, and I do find it very curious, that WDFC, WD-40, an industrial basic material specialty chemical stock, showing weakness. Is that a potential short? Well, that's going to be part of the conversation and investigation. And I'm going to dig a little bit deeper into that because it showed up on this screen. There's a lot to this. There's a lot of information. You're sitting here going, well, give me a trade, give me a trade, give me a trade. Well, got to get to the open. Got to get to the open. But I do know that the way that I'm looking at this, particularly higher volume stocks, again, I can take it down to that 3-day. I can take it down to that volume weighted average price. And especially as we get toward earnings season, these names are going to be even more important, breaking out, breaking down ahead of earnings and knowing exactly what to do with these names, particularly using volume weighted average price on the day of the earnings date and knowing how to trade it that day. Okay. Let's see. What else do we have? So then, again, we go back to the numbers, right? So this is momentum. This is our intraday focus, right? We're the one that you're seeing on the right. This is a measurement of stocks breaking out versus breaking down. So I told you I'm just keeping this very simple for this audience. I'm not going to go into the coefficients of every single sector. That's insane, right? But all 11 sectors right now have different coefficients, and they also behave in a very distinct ways, right? The coefficients for technology, the equation for technology is vastly different than the one for materials, largely because of beta coefficients. But the thing about this, just a kind of a poor man's way to analyze this, is just take the number of stocks that are up overall in the S&P 500 and subtract the stocks that are breaking down, up 5.5%, up 5%, up on the month, beta coefficient 1 to 2. Subtract the ones that are down 5% down on the month and beta coefficient 1 to 2. Why does that matter? Because it takes a lot of money to keep the S&P 500 over its 20-day moving average, and it gives us a real-time assessment of money flowing into the S&P 500, which is the most dynamic of the indices. The NASDAQ has the same thing, though, and the Russell has the same thing. You can do it across the board with all of them. I focus on the S&P 500 here because, once again, I am so heavily focused on trading volume weighted average price with the SPX. Now, with that in mind, just note the companies that have really stood out today in strength are BBAI, Abercrombie & Fitch, SRFM, and there will be likely movement on these. You could trade volume weighted average price, and you can do a lot of different things with it. AA, NWPX, NWN, ANF. ANF, very, very strong stock. And as you could see, coming back up, 2050, take a shot. What do? Okay, well, in this environment, strength in the retail sector, consumer cyclicals, because high momentum. Right now, we just broke above that 50-day moving average. Right now, we're seeing improvement in the RSI, MFI. I'd like to see the MACD hold out a little bit harder, but I'm going to stay right here, and I'm going to look at the $80 call for a week, 2 weeks out. And if I am a little bit more of a measured trader and I want to be a little bit more conservative because I'm worried about what might happen if it breaks back down, okay, fine. I'm going to stay in the money at, say, 79 or maybe even 80, and then I'm going to sell a call up to maybe 84, 85. And there's a lot of different things that you can do with that spread. Now, spreads, I'm going to tell you, they're good because you're defining your risk ahead of time and you could protect yourself to the downside a little bit. But a lot of people don't like it because the last thing they want is to see Abercrombie & Fitch go to 100 and they effectively cap out at the 85. So in this environment, it takes a lot of preparation. It takes time, and you have to have a checklist. And I kind of gave you a little bit of a preview today of what I'm looking for. And what's wild about this is that you're seeing 30 minutes of conversation, different things that I'm talking about here, and I might only get one trade out of it. It might just be one conversation, and it might all roads just leading to Abercrombie & Fitch, possibly for today and tomorrow and for the rest of the week. And that's really all I need. I just need one name that builds high conviction, that shows strength, and allows me as a momentum trader to take advantage of the situation. It is 9:20. Don is going to be here soon. I saw Gianni's name pop up as well. I hope you guys are having a great day. I hope you have a good trading day, and I hope that we prepared you a little bit. Abercrombie & Fitch is the name that we are focusing on. I'm sure everybody will have some opinions on that in a little bit. I hope you guys have a great day, and I'm just looking really quick to see what time I am back on, because I know that I will be here today. I will be back at 12:30. So I will see you all then. I hope you have a great day. Cheers.